very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the Nvidia reversal. What that says about the state of the tech trade right now, we discuss and debate with the investment committee. Joining me for the hour, Josh Brown, Malcolm Etheridge, Rob Sechin, and Stephanie Link. We'll show you the markets here. And it's not a great picture, to be quite honest, following what was an amazing print from Nvidia on almost every metric that you look at. The commentary matches. JP Morgan, are we back? That was the most popular client question yesterday before Nvidia. Our answer was a yes before and after. Dan Ives watching Nvidia like watching Michael Jordan in his first few years for the Bulls. Baird, Nvidia has the most predictable revenue path for the rest of the year. And yet, Josh, the stock is now down almost 5%. You know, what do we make of the price action in this name and what it says about the bigger picture of where we think we are here?
Okay. Number one, this stock never rallies after earnings. I don't know if people realize that. Go back and look at the last, I don't know, let's just start with the last 12 quarters, the last 3 years. Nvidia runs into its numbers, and then the next day is almost always anticlimactic. I can't explain why to you. I'm just telling you the reality of the way the name trades. Not at all surprised to see it pulling back. It did make a nice move into its earnings. It was the best of the Mag 7 names going into the announcement.
Yeah, giving a lot of it back here because it was up, over the last week or so, a little more than 5%. Yeah. And now that's evaporating.
Right. So if you're a person that buys the stock on the day of earnings thinking you're going to get a plus 8% the next day, I'm sorry. Look at a chart. Look at the way that the stock has reacted over the last few quarters. Not a great strategy. For investors, the big picture here is there was only one soft thing in the report, and it really wasn't that soft. Only one minor concern, and I'll start with that. Slight miss on compute, 51.33 billion versus the street at 51.6. Literally, it's a joke, but whatever. We should shout it out. The reason why that number matters to people is that the only real concern here is that they may be losing a tiny bit of market share to AMD and at the fringes, TPUs from Alphabet. I think that's reflected in the multiple. Now you're talking about a stock with a sub-18 forward PE in a market that trades even higher than that, 17.65 times forward earnings. I think that more than discounts the fact that TPUs are going to be part of inferencing training. We are going to see chips from the Amazons, et cetera. I think all of that is already factored in. And right now, just so you know, this is the lowest for all the Mag 7 names and the lowest multiple of the top 12 largest market caps in the S&P. Only JP Morgan has a lower forward earnings multiple. So should Nvidia trade at this much of a discount to its own mega cap peers, given the degree to which they crushed and the guidance? Obviously, I think the answer is no, not selling, staying long.
What if, Malcolm, we just need to come to grips with the fact that at least now, the disruptive nature of AI itself, job loss, impact on different companies and their businesses and their revenue models and their revenue growth, et cetera, is more powerful than whatever Nvidia or whatever anybody else could say from the mega cap group. Feels like that's kind of what the market's trying to grapple with.
I think that's reasonable. I was on Closing Bell with you yesterday, and I told you I had a feeling that the market could figure out a way to turn really good news into bad news one way or another, because it seems like a market that just wants to trade out of AI, at least right now. And I think, to your point, it's incumbent upon all of the leaders of the AI revolution right now to say positive things. It's the reason you saw Jensen Huang and Mark Zuckerberg bear hugging each other and making sure that the market understood that their partnership is intact and there's nothing to see here. It's the reason that OpenAI has been doing what it can to go back on a campaign to make sure that people know that they are going to be a player here and don't give it all to Anthropic. And so I think that it is really important that we separate the headlines and the announcements of a deal and the framework of a deal from actual activity that's generating revenue. And I think now that's what we're starting to see investors do.
What did I say, the last couple of days? The worst thing, theoretically, for this market would be for Nvidia to have great numbers, a great earnings report with great guidance, and the price action be miserable on the other side of that. Yes, as Josh points out, it typically doesn't trade great up or huge up or down following earnings in the more recent reports. But on that point, Great report, not great price action. That needs to tell you something, doesn't it?
It tells me that the AI Frankenstein narrative, this monster we created, is still intact, honestly. And it might be a little bit of a time before it's over. You know, it's hard to find anything not to like from a fundamental standpoint in that earnings release, as Josh said. But I think it's emblematic of what we're seeing in the entire equity market right now. Healthy fundamentals outweighed by sentiment. Investor attention is focused totally on something else, and that's how these companies are going to disrupt the SaaS business, the software trade. My investing career has been riding these momentum waves, watching them reset it sometimes. When they reset too rapidly and a narrative gets traction that's probably way overdone. We're talking software is completely displaced. These are service businesses, okay? They are going to reach a valuation standpoint where people start to say, is this right? No doubt some are going to be disrupted, Scott.
We're going to get to the whole debate over software, but Steph, if this report was supposed to make anybody feel better about the mega cap trade, it doesn't appear to be working for most of the names today, which are almost all in the red. Meta is just barely a blip in the green. You trimmed Amazon today. That's the big news from you, which says a lot to me. The stock's down 10% year to date. So why do you do this on the back of what was a pretty darn good report from Nvidia?
Well, Amazon, the free cash flow story, that's going to be the overhang for the stock for the short term to medium term, in my mind. Negative $10 billion in free cash flow this year. And I have a real problem with that, to be honest with you. They're going to spend on Capex $200 billion this year, up from $150 billion when we were headed into the print. So I do not doubt that the fundamentals, and I do not dispute the fundamentals are great at the company, growing 11% in total revenues. AWS, they're actually humming at this point and probably going to expand. But I'm not really sure the stock could get out of its way until we get more clarity on the free cash flow. In terms of Nvidia, these numbers are insane. I mean, total revenues of 73%, data center up 75%, and compute up 58%. Gross margins, which everybody was nervous about, 75.2%, and probably going to stay around that level. The problem is the stock is up 98% since the April lows. So the expectations are high. Same thing for Broadcom, by the way. That's up 111% since the April lows. So, you know, we got to give it a little bit of a break. It could take a breather for the time being. And oh, by the way, we all know, we're going to talk about software in a bit, but software is flat since the April lows. So where's the real value and where are people offside? They're offside on software, and there are some opportunities. But that does not mean that the game is over for Nvidia or Broadcom or the AI trade.
And this chop, Scott, really what it does is it allows fundamentals to catch up to the price move that happened. If you get chopped, deceleration, these earnings are still exploding to the upside in many cases.
Look at the reason why Steph trimmed Amazon. All you guys own that stock. These companies are spending a large percentage of their free cash flow, and
all
they're projected.
Actually, all of it.
Okay, so then if they're why are we just getting upset about that now?
Why are they doing that?
I agree with this. I know what he's going to say. I agree.
Why would a company take 100, in the case of Amazon, I think it's 110% of its operating cash flow for this year, and commit to putting that into Capex? Is it a suicide attempt? Is it like some sort of Brewster's Millions situation where Richard Pryor has to give away $30 million in order to inherit $300 million? Is it like some sort of a mass delusion? There's obviously a demand side to these Capex numbers. And by the way, I talked to Nick Colas and Jessica Rabe from DataTrek about this on Monday. They calculated Meta, Amazon, and Alphabet, all of their Capex budgets for this year are 100% of their cash flow. So people said, where do these numbers come from? How do they get these numbers? Literally, it's all of their cash flow. The only reason a sane, rational business manager would do anything near what we're talking about here is because they see what this could lead to on the other side. Could they overshoot? Totally.
Scott.
What happens if two of them do it and one of them doesn't? What does that
Then
look
you're-
like
then
for
you're
that
done.
third
It's a
company?
deep-
No, I
It's a
understand that,
defensive move.
but Steph, if it's such a defensive move, then why do you have such a problem with it?
Yes, Steph.
I don't think it's a defensive move. I want these companies to spend, but I also want it to be a little measured. I want to see operating leverage. That's what I'm looking for. And when you're spending as much as they are, you're not going to get it. And so some people will look through it. That's fine. I still own some of it. I just found that there are other opportunities out there that are more compelling and maybe actually less owned. And that's what I did. I took money from Amazon and I bought something that I already own that's down, that I have more conviction in.
I think what we also have to consider that we don't talk about a lot is the regulatory pressure that these companies are up against. So if you think about Wisconsin, where they've been heavily investing in data centers, if you think about Virginia, where they've been heavily investing in data centers, the neighborhood organizations, the local political apparatuses have all been taking heat from the people who live in those places. And so these companies have to get, as fast as they can, shovels in the dirt to be building out these data centers before an election cycle that turns over the loose regulations that have allowed a lot of these buildings to pop up.
I think you make a good point. It's like a not in my backyard argument
100%.
now.
So
And
That's
as you
scarce, so that becomes scarcity, which becomes pricing power. And I think that Malcolm is 100% right. Very underappreciated component of this. It's not crazy to think that the midterms, in some way, could end up in local jurisdictions becoming a referendum on, do we even want these things in our neck of the woods?
Well, what if there's enough political pressure put on these businesses to help foot the bill for the power to run the very data centers that they are building and investing in? That takes a hit to somebody's bottom line, doesn't it? Isn't that a risk? Does anybody
Well, I think
see that?
I think what you're seeing in the utility stocks, the XLU made a record high this week.
It did. And let's, in fact, before you make the point, let's show what is, I guess you could call it the great divergence between many of the AI stocks like the mega caps and the IGV, the software names, and the power players. You're spending, you're spending, you're spending. Well, who's reaping the benefits of that? All of the power producers that have to make the data centers work and make them run. We're showing you here the Mag 7 and the IGV versus the power infrastructure type stocks, and it's obviously no competition in terms of performance. 1 month, Vertiv's up 35%, GE Vernova's up 27%, Eaton, Constellation, and Vistra, Steph, are up a lot relative to the other AI trades, so there's not anxiety everywhere.
No, definitely not. And I don't own Nvidia, but I offset that by owning overweight all of those names. Because if you do believe, and we've talked about this a lot, if you believe in AI, which we all do, you do need data centers. And you're going to see $7 trillion of data center spend between now and 2030. You also need a grid. We have 75% of the grid is over 25 years old. We've said that many, many times. You've got to upgrade the grid for this thing to work. And you're going to see $1.4 trillion in grid spend between now and 2030. And then, of course, you have power, and we don't have enough power. I mean, GE Vernova is sold out until 2028. And we're going to see $1.1 trillion in spend on power, which we still don't have enough of. And so I own all of these names. And by the way, these orders and backlogs are crazy. I've never seen Vertiv having an order growth year over year of 252% and up 150% sequentially. Sequentially. I mean, that's really, these are absurd numbers. But yes, they are all benefiting from this spend. That's where I'd rather put my money versus the ones in Mag 7 that are spending all that money and they're not seeing the growth like some of these
Unless you
other
think there's a
companies
bubble
are.
and you own Vistra, right? I mean,
We
unless
own
you think there's a
NRG, we own Vistra. I mean, these are names that we've owned for a long time, and they continue to benefit from the infrastructure build out here. And there's no doubt that if there's pressure being put on these hyperscalers to invest in energy, these guys are the beneficiaries. Steph's right. I'm just saying, why are you getting off the other trade as the fundamentals become attractive? Because you saw headline risk, because they moved from cap light to cap heavy. As Josh said, the reason they're investing, the reason they became cap heavy is because this is generational opportunity. They need to do it.
Unless you think the whole thing is a bubble. Unless you think the whole thing is a bubble.
Well,
and that all these stocks are going up, and the way that those charts look are going to look ugly, one day. Who knows?
I'm sure there'll be a reset, an episodic reset. I'm sure, and this might be it. The narrative might allow for it.
We already know.
Back up the truck.
Very famous quote about the advertising business. The guy says, I know 50% of my ad budget is wasted. The problem is I don't know which half. We don't know that every dollar being allocated to this data center build out is definitely a good ROI on that dollar. But broadly speaking, if you cater to governments, the military, Fortune 500 companies, small and mid-sized business, and you're Azure, you could pull back the reins. But if AWS doesn't, and who's going to have the more advanced chips in place and compute that's going to be relevant to that audience? How are you going to consider yourself a viable player in data center if you're not building AI-enabled infrastructure? That's the bet here. They're all making it. Yes, there's probably some waste. Of course, every tech innovation wave has something like it.
Race. You're saying it's an AI arms?
Well, I don't see what is the alternative.
There is no alternative.
Right.
That's the defense.
If you're in the business, you're in the business.
Yeah.
Could we talk about software, which is trying to make a bit of a turn today? Some, looking at the price action in some of those names and saying, well, maybe we're trying to put a bottom in. If you look at Salesforce was down, let's look at Salesforce, because that stock, last I looked, had turned positive. And it still is up. The guide wasn't great from a revenue standpoint. They announced the $50 billion buyback, though, sort of Benioff, standing up and saying, all right, this is getting a little absurd. And he was animated when he was on with Jim Cramer last night, talking about how the markets punish these names unfairly in his mind. Listen.
We are projecting $46.2 billion in revenue. Jim, the first time I was on your show, I think it was $1 billion in revenue. We're talking $46.2 billion. It's just the 46 times since 2008 when I was first. 2009, I think I was first on the
2008.
show. Amazing.
Well,
and Jim.
Yes.
Jim, that, of course, was one of our first SaaS apocalypses. Remember that? You said I had to come on the show because it was a SaaS apocalypse, and then we lived through the 2020 SaaS apocalypse when you're like, oh, how are you going to survive through the pandemic? And here we are, Jim. We're in another SaaS apocalypse. It's a series of SaaS apocalypses.
All right, that's Mark Benioff with Cramer. Maybe this time is different than some of the others. Not sure. Dan Ives says solid quarter. He lowers his target, though, to 325 from 375 to reflect the lower multiple. You have at least 5 target cuts today. The lowest I saw was to 194, reiterated underperform at Bernstein. Rob, you own this name.
And this name, I own some other names, and I think we're likely to be longer at some point, but we're not ready to call a bottom. The reaction today demonstrates how oversold these names have become and how extended the positioning between semi and software have become. And most companies have been absolutely guilty until proven innocent in this space. And there's valid questions on terminal growth rates. There's no question about it. But I think we're in a place where these service businesses, Scott, are ultimately possible beneficiaries of the things that are happening here. Maybe it's not.
They want you to believe that.
Well, and we do. We've seen these dark periods before, and they become essential adoptions into many of the way businesses operate, and they can develop AI agents that ultimately are useful to their technologies and their service into businesses.
I think a memo went out this week or over the weekend, and I think in the memo, this is like metaphorical, not actually. Nobody wrote this in print, but I think a conversation behind the scenes was had. It's enough already, Dario. No more podcasts. The guy from Microsoft, nobody wants to hear from you anymore either. It's enough of this kind of talk. And now we want supportive talk from the AI layer of tech, or you're going to have some very angry customers, all of which are in the software business.
But how are you so you don't even, your actions speak louder than words. They don't have to say anything. They continue to roll out new products and innovations that are.
Disagree.
Look at Perplexity and what they've done in the last 24 hours.
Let me finish the thought. I think you'll agree with what I'm about to say. Here's what we've seen since this hypothetical conversation happened behind the scenes. We saw in my industry LPL announce a massive thing with Kevin Nolan, who runs the wealth management vertical at Anthropic. This was not about, look how many financial advisors we're going to replace. It's, hey, here's LPL, almost as big as Morgan Stanley in terms of advisor headcount. We're doing a collaborative deal where Anthropic is going to power the human, I don't know what they call them in Silicon Valley these days, meat computers, who actually are serving clients on the front line. And that was not a disruptive announcement from Anthropic. It was a collaborative one. Then you hear Jensen Huang come out and say, if you have a robot in your kitchen, are you trying to invent a new Cuisinart? Or does the robot learn to use that Cuisinart? The Cuisinart is a great stand-in for Salesforce, for ServiceNow, for Workday, for all of these tools. It's more likely the agents are going to learn to use the SaaS company's products rather than how quickly can we destroy them and build new ones.
That's probably why when Jensen Huang was asked about what's been happening in software, when he was on Squawk Box, he said the following.
I think the market's got it wrong. I think it's very likely that these companies that we're talking about are going to introduce agents that run on their platforms. You know, these agents, of course, they have to be experts in what they do, and nobody's going to understand customer service better than ServiceNow, and they're going to come up with agents that are really fine-tuned and optimized for the type of work that uses the tools that they have.
Okay, so there's Jensen defending, in some ways, the software business. Snowflake also reported their revenue guide was good. The stock's not reacting very well either, Steph. What's happening here? You have at least 7 target cuts. Top pick at B of A, 275. Target to 195 at Bernstein. Their market perform. So what's with this one?
Well, last year it really had a very nice year, and the year before that it had a really bad year. It's a pretty volatile stock, but I think that the numbers are very supportive of the stock going higher over time. Product revenue growth of 30%. Who do we know that's actually growing product revenue at 30%? RPOs are running up 42%. Huge. Deferred revenues, 31%. Their net retention is 125%. I mean, their customers love their products. They've got more products coming out. The guidance was fine. I think a little conservative, but we're learning that this management team actually is a lot more conservative than previous management. I think margins eventually can get to 15, operating margins can eventually get to 15%. I mean, they just did 9. So I think that there's a lot of operating leverage in this one, and I think it's just, it's getting caught up with the rest of software. I think that's the opportunity, though. These guys have a consistent way of growing 25 to 30% in product revenue growth, and I think that's going to continue for quite some time.
So you bought more Synopsys. It's the one that you were alluding to earlier when you said you trimmed Amazon, and then you bought more of something, and this is the something.
This is the something. It was an outstanding quarter, and this was a very conservative guide, and that's the reason why the stock is down 5%. But this thing is down 35% from its highs. Earnings grew 24%, revenues up 66%. Design automation grew 96%. This is mission critical stuff that is sold, software that's sold to the semiconductor companies, the sophisticated semiconductor companies. The more sophisticated AI gets, the more they need Synopsys and Cadence, by the way, and it trades at a 6 multiple point discount to Cadence. And they just made a huge acquisition with Ansys, and I think that it's going to grow, enable the company to grow its total addressable market from $31 billion today to $58 billion by 2028. So I just don't see why this stock is down as much as it is, especially today after a good number, but conservative guided is conservative guide.
So in terms of stocks that we think, or you guys ostensibly think, are down too much, ServiceTitan, let's look at that one, because the stock was down 34% year to date. It is not down 34% today, and it's probably not down 34% year to date anymore, because stock's up near 7%. What's the deal with this surge today, of your name?
So I added to this one, and I added to Toast during the unpleasantness last week, not this week. And I think the obvious thing to say here, in the case of ServiceTitan, the company's only been in business been public for a year and a month or something like that. they just don't have the institutional sponsorship. So when people started selling software names, this is in all those baskets. The bottom fell out. People don't even know the story. That's why it got to as low as it got. It's the dumbest thing in the world if you think carpenters and plumbers and electricians are running out to code their own customer billing software. That's obviously never going to happen in a million years. So this, to me, is a screaming buy. That's why I added to it. And I'm not saying it goes right back to 100. I just can't understand the rational person that would think that this thing is under threat from AI.
Okay. So Zoom's another one that was on the watch list today for sure. The stock's down a lot. Josh had sold it recently. Now we learned from our own Joe Terranova, he owned it personally, he sold it today. And you'll hear from him the next time he's on regarding it directly, but stock's down 13%. Joe's like, I'm out of here. And then lastly, before we get to a break, you bought, and you've been making the point, hey, I'm buying the SaaS apocalypse. And you bought more, I think it was ServiceNow a week ago, and now you bought more IBM today.
IBM, so as you and Josh were having the conversation a little bit ago, Claude Code announcements have caused these opportunities for investors who are willing to look past the red on the screen and actually take action. IBM is one of those to me. A piece of Claude Code announced that it could actually replace the old 60s coding that powers ATMs that IBM's specialty is, and the stock goes down 12% in a day. I loved it at 300. I really love it now in the 240s. It was silly to me, and so I stepped in and added to that position. It's a position that I own really based on their developments in AI and their ability to create a business line out of nowhere. They've 4x'd their AI book of business basically in the last year and change. That's what I'm invested in, not their ability to create old code models and keep them going one more decade.
All right. You can't talk about software these days, it seems, without talking about what's happening in private credit. They are now linked. There's no doubt about that. Now you have another warning from a very well-known credit manager. Our Leslie Picker just spoke with another very big name in the private equity space and is going to join us on the other side of this break with her conversation and her insights into exactly what happens from here. We're back after this. I was talking about software and private credit being attached at the hip these days. Marathon's Bruce Richards, big credit manager, fears 15% direct loan software defaults. That is what he has told according to a report. That's what he said according to a report. You have a lot of big names speaking out about what's happening here. Leslie Picker spoke with another one, the Carlyle CEO, and she joins us now. What'd you learn?
Yeah, so we spoke with Harvey Schwartz, the CEO of Carlyle, at their shareholder update this morning. I asked him about what's going on with software and how it's impacting the private markets industry, and he said there's been kind of a big oversimplification as it pertains to software and the impact there. Now, it's important to know Carlyle, as you look at their peers in the alt manager space, they're the best performer. They're still down significantly, down double-digit percentages, even despite today's higher moves as a result of some targets that they set. But they only have about 6% of their AUM that is exposed to software. So they're a bit more diversified into other areas than some of their peers, perhaps. And so that is why you see them outperforming, although still kind of down with everybody else. Now, the reason why you see so much software in the private markets is because it wasn't always this way. Back a couple decades ago, no one would, finance a software buyout because they didn't have any real assets. So people weren't as comfortable with collateral. Then they realized, okay, they have this recurring revenue model that's very attractive. So you can model things out into the future. That gives us some comfort in terms of being able to put leverage on this and make a return. That worked really, really well for a long period of time. Then you get to the 2020, 2021 phase of things, and people were doing these at very high valuations. Now there's this big rethink. So when we talk about the 15% number that you mentioned, Scott, some of that has to do with just kind of the behavior that we saw in the pandemic years and the valuations that things were done at and the financing that things were done at. And if you're in a dramatically different world, how do you model the recovery from that, and how do you model just the overall portfolio health as a result of this rapidly changing world, which is something that people got into the software industry because it was so predictable and because they were so comfortable with it.
You guys both own it. In fact, Malcolm, you just bought more.
So I bought more yesterday, actually.
Okay.
So I sold out of one company that has its roots in private credit and instead bought more Carlyle, because to Leslie's point, it's the least dirty sock in the hamper, if you will, when it comes to that. So getting rid of Blackstone made sense to me. Adding to Carlyle made sense to me. The reason I want exposure to this space is because of, to your point, the annually recurring revenues that Carlyle brags about, right? Their distributable earnings are obvious, it's easy to predict, and so it's a great space to be in. I just don't necessarily want all of the exposure to building out the AI data center.
So you went from an actor in the space that had 7% exposure to one that had 6%.
So Blackstone, I am concerned, has a little bit more exposure than we can actually see because of how many of those loans we don't have the data on. Carlyle, to me, looks like a much cleaner picture.
Do you mean the GP stakes?
Yes.
The fact that they're invested,
Yes.
whereas Carlyle's not invested in other private equity companies.
So I mean, you had, it's the week in which you had Boaz Weinstein. We talked about this, right? The wheels coming off in private credit is what he said down at iConnections in Miami. You've been defending this space.
And still will. There's no question that there is episodic issues in this space, whether that be the energy credit scare in 2016, which frankly was massively overblown. The exposures weren't as big as everyone thought, but the spreads widened out. Realize that underneath every one of these transactions, there's equity. So you're worried about the credit instead of the equity. If the business is performing, I am telling you, the equity is stepping in to save that investment.
I don't think that's what people are worried about. People are
So what are they worried about?
They're worried about future fundraising and therefore revenue, because the investment.
But doesn't that impact the equity more, Josh?
Let me finish. The thing that people are worried about is the growth plan was we're going to tap America's 401ks and we're going to go through the wealth management channel and insurance, et cetera, and they've made some inroads. But the big idea was that institutions are fully invested in these asset classes. We need the next group to come in. We're going to double our share of the U.S. investable asset. The problem with that story is if there is a credit hiccup, right at the moment that the American public is being introduced to these strategies and they see some blow up, some pain, that's going to push that story out further or cancel it entirely, especially if you think Lloyd Blankfein is right and the government looks at this and says, you know what, actually, let's pump the brakes. Not a great idea.
That last part's the most valid point you made there, but I have always found in doing this for a long time, and I'm sure you have too, there's two things that really drive returns in markets. Number one is riding momentum that's positive. If you can ride it longer, you're going to do really, really well. Mag 7, whatever it is. The other is steering into disruption when it gets crazy. And right now, the public BDCs are discounting dramatic not just 3-5% defaults, dramatic defaults in their pricing, okay? And if you can go in and do the work, you can earn higher forward returns when you stare in at the point of
duress. Would you buy the BDCs or the sponsors right now?
I have
fresh.
But
fresh cash. Which would you buy?
If I was doing a trade for profitability, I'd go to the BDCs. If I was working with somebody,
you would be one of the few.
You would buy OBDC before you bought Blue Owl Equity.
So Blue, we own more of the other, but yes, as a trade, I would do that because I think it's been I think it's been massively overdone. You look at KKR with 22% yield. You know, you can go to Ares and get a 9% yield because their portfolio is viewed as maybe a little more safe.
Are you defending it the way you are because you're putting your clients into private credit? More so than you ever have?
Not more so than I ever have. It's been a consistent story for us. And by the way, most of these portfolios, we dive in. We do a lot of work. We understand the credits that are in them. And I know there's different credits in the public BDCs versus the private BDCs. They're different liquidity profiles. But at the end of the day, if you do your underwriting, we can't be fear-mongering this. They have a ton of equity beneath each one of these loans. It's a ton. It would have to be hugely disruptive. I will continue to defend and take the heat.
Isn't what's happening in software hugely disruptive?
It's expected.
What meets the moment of hugely disruptive?
It's expected
What's
to
the
be.
definition of that?
So tell me why, when you look at Indeed, They're hiring, they're 11% up in the software engineers that they are hiring and at the SaaS businesses. Why is that happening? Is it because they're unhealthy, Scott? That doesn't make any sense yet. Yes, there's possible disruption coming. And by the way, most of these loans are short duration loans. You're worried about the credit? These are not long loans. Private credit are not long loans. They're not. So
they still need to be marked somewhere.
They do, and you could question, well.
No, you can't question.
Hold on. You could say that maybe there's some more defaults in there, but is it discounting a 22% discount to NAV? I think at some point you have to say the juice is worth the squeeze. Malcolm's saying it's not. I'm saying it could be for a little bit.
Until the juice gets sour.
Okay, well, I've told you, my success in investing has come from two things. Riding that wave, and also when disruption happens, trying to steer into it.
We're so over time. My gosh, I'm sorry, Katie. Do you want to just wrap it up real quick? You deserve a last word.
Oh, no, I was just going to say it's the trustworthiness of these marks that I think is the next thing that will be in focus.
Yeah.
The fact that you can do the work on the BDCs, but we've seen countless examples of loans that were made that were valued at par essentially a month before and then zero the next month. So there's some concern about the trustworthiness of what you are seeing after you do the work.
All right, thanks. We are back with Josh Brown's best stocks in the market. And I don't know if this is an omen on what the feeling of this market is, but it is on garbage.
There's no analogy. No analogy. All right, waste management. Bill Gates was doing Halo before I made it cool. He owns 28 million shares of this thing. I think 7% of the company. Before that, in the 90s, he was buying Republic Services, which was another garbage collection stock. Basically, waste management is in this really interesting spot. You have a technical breakout that looks like it's about to happen. Stay tuned. I'll tell you that in a second. But the story here is this is a company that spent the last 3 years making massive Capex investments. They've built automation into their machinery. They bought Stericycle, which is medical waste, which is going to be, I think, hugely profitable now that they've integrated it. They've done a lot of spending, and as a result, you see the stock price hasn't done much. Now, that spending has been converted into profits. They're talking about 29% year-over-year free cash flow growth at the midpoint. That would be the biggest free cash flow jump for this company since prior to COVID. Technically, a decisive push through 238, 240, I think triggers a new range, takes us into a new bull market for the stock after a lot of consolidation. Your downside here, if you're a trader, I think you want to use that 222 area. That has been support. You can see how the stock had bounced off of that before. Watch that rising 50-day. Next stage is we want to see that 200-day turn up, and I think it's a very well-defined risk-reward trade from these levels.
Okay. There it is, WM. We'll take a quick break. All right, we were learning during the break that you are a French fry aficionado.
Yeah, can you believe it? This health nut?
Which you should be, given your history in Shake Shack, which is surging. Up 10% after earnings, right?
Yes. Look, the reality is that they have an operator now running this business who came from a much larger system at Papa John's, and I think what you're going to see happen here now going forward is people are going to look at results like these, and they're not going to have these like, oh no, is Shake Shack susceptible to the consumer every quarter where we see these huge pullbacks in the name. The reality is everybody is susceptible to the state of the consumer, but the Shake Shack experience is a premium experience, and quarter after quarter, they deliver. They're innovating, they're offering a better discount program on things like fries and sodas, and in the end, if they get people to continue to come in, the stock's going to keep working. So I am long, not going anywhere.
What about over the we're looking at it, why is it down 8% over the last year, do you think?
None. Not in the results. So.
I mean, they deliver these kind of results, you'd have to wonder. I mean, if Brinker, Chipotle, Darden, Roadhouse,
it doesn't have valuation.
Right. Wendy's, McDonald's, they're all higher today, too.
More sophisticated answer. It doesn't have valuation support. It's an expensive stock.
Okay.
It always has been. It deserves the premium multiple, but it doesn't help you when the sector gets shaky.
Gotcha. Thank you. Stephanie Link, what's your final trade?
Truist Financial down 9% from its highs, trades at 1.07 times book.
Okay. Who's got Netflix?
Me.
You?
50% discount to its long-term average. I don't think that, Warner Brothers is going to matter that much if it doesn't happen. They have great content.
The stock's up today, and it was up big yesterday on the idea that is not going to happen for them, for Netflix, right?
Yes. So, and listen, it's trading at a 25 times PE. It hasn't been at these levels for a long time. And they're going to monetize that content library with or without Warner Brothers.
You miss it after selling it now. If they don't get it,
I added some in the 70s. I like it. Rob's going to make money here. I'm long the stock, but I don't own enough of it. So I actually hope that it doesn't raise higher right away.
Zscaler, Mal?
Zscaler reports tonight focus on net customer retention percentage.
Okay, thank you. Joby?
This is the stock I get the most questions about, like
really?
on the street. Yeah,
right.
People are. So yes, to answer everyone, I still own it.
Okay. I'll see you on the bell.
Hello, welcome to Blue Cloud Trading. I'm George. It is Thursday. It's February 26th. It's 2:48 p.m. Eastern Time as I'm recording this video. We just saw some clips from the halftime report earlier today. Josh Brown and a few other guests, they went over a number of stocks and ETFs, and we are actually going to cover a good portion of them. Not all of them, but a good portion of those stocks. We're also going to analyze the indices here, what's happening right now in the markets. Let me just show you very quickly what stocks we will be covering from the show. It's about 26 stocks and ETFs. Now, what I've done is I've highlighted the top 3 from a technical perspective, which ones look best technically. We'll also take a look at the Mag 7s. We will look at Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, and the index ETFs. All right, the SPY, the QQQ, the Dow, the Russell, the VIX, which is up a little bit today. We'll take a look at all those. And we'll use the Ichimoku indicator, and I'll go briefly into that in a few seconds. But first, let's look and see how the markets are acting right now. Because, initially the Dow actually gapped up a little bit in the morning, moved up slightly more, and then dropped, right? Now, it moved up again, dropped again, but it did not take out the low, which is a very positive thing. So between 10 a.m. and 1 p.m., we hit a double bottom pattern, which is a bullish pattern. And now the market seems to be recovering a little bit. It's up 0.12%, 0.11, still moving. The NASDAQ, it actually gapped down this morning. Yesterday's Nvidia earnings did not really impress Wall Street. And as you can see here, market dropped. It hit all the semiconductor stocks, as you'll see in a few seconds when I cover that. NASDAQ is down 1.17%, but like the Dow, it also is finding some support at these levels down here. So you can see the double bottom that forming. And if we can break above this level here, I think we might see a continued move up for the rest of the day. The S&P 500 down 0.5% so far, but it seems to be recovering. In fact, the S&P 500 has in fact broken this high right here. So you can see just barely, but enough where I think it's a higher probability it's going to at least try to get back to yesterday's closing price, which is that dotted red line. Russell 2000, same thing. It's up 0.42%. All right, let's take a look at the heat map. What is that telling us? The heat map's going to look at the individual stocks within the S&P 500. And you can see that all the semiconductors here, the majority of them are in the red, pretty much, right? Broadcom is down 4.7, Nvidia's down 5.31%. Yesterday's video I did later in the day. It was after hours, so we kind of actually went over Nvidia right after the earnings announcement. I was showing you guys what it was looking like, how initially Nvidia popped, but then it started to lose steam as I did the video. So it was kind of an omen, I suppose, that it was more than likely that Nvidia was going to drop this morning, and it did. Now, the software stocks actually did pretty well. And information technology services all up there. You can see a lot of those company stocks there. Here's the technology software application stocks, right? Like CRM is up 4.5%. But yeah, the semiconductor, the stock's not so good. Now, when we look at some of the larger mega cap stocks like Microsoft, that was up it's currently up 0.4%. Apple is down 0.37%. Amazon and Tesla down. Google is down 1.5%. Meta's up slightly 0.58%. And the financial stocks seem to be doing okay today. The medical devices, diagnostics for healthcare are looking good, but the drug manufacturers are not looking particularly strong. Let's take a look at the themes segment here. This is going to give us a little bit more insight on some of the different themes, for example, like artificial intelligence, cloud computing, electric vehicles, transportation, logistics. Now, if I hover over some of these really bright colored green boxes here, like trucking, ground freight, look at the percentage moves today in those stocks. Here's air travel. The air travel stocks, American Airlines, you can see there is up 6.19%. Under space tech, data analytics, there's a few companies like RDW is up 11.48%. And under environmental sustainability, you can see that some of the company stocks like MEG up quite a bit, 21.2%. So I like this feature here. That's a new feature in FinViz Elite. If you like the software this that I'm using right now, it's called FinViz Elite. And this software is called TC2000. And there's a link if you want to get a $25 coupon for TC2000. In order to get that, just come to my YouTube channel here, Blue Cloud Trading, click on 10 more links, scroll down, and there's all the links. Now, there's the FinViz Elite link. There's the $25 coupon for TC2000. If you want to become a member on the channel to get access to my member only videos, like the one I just did this weekend, uh, it's over like 56 minutes long. I go over my entire portfolio, and you can access old videos as well. They're educational. They share a little bit more about my strategies as far as how I trade. Okay, let's get back to the stocks. So FEZ, we're going to start off with the index ETFs now, and I'm going to show you guys how, for those of you who are just kind of stumbling upon this channel for the first time, how to use this indicator, Ichimoku, to help basically give you some more insights about whether or not you should be adding a position, or maybe holding a position, or maybe even closing out on a position. And what it does essentially is tell us how strong the trend is, right? So here's the price currently right now. For example, for the FEZ ETF, it's at $69.14 per share. It's down slightly 0.29%. But I do like this index ETF versus the SPY, the Qs, the Dow, the Russell. Why is that? Because price is above the moving averages, the Tenkan, that's the 9 period. It's the midpoint of the last 9 periods. They also call that a conversion line. Then you've got Kijinsen, which is the midpoint of the last 26 periods, the baseline, so the slower moving average. We want price to be above both of those, and we want the green line always to be above the red line. And then you've got the Ichimoku cloud. Ichimoku stands for at a glance. So we want price to be above the cloud, which is, you can see once we got above right there, it led to that nice move up. It consists of two lines, single span A and single span B. The single span A is derived by taking the midpoint of these two moving averages and then projecting that 26 periods into the future. The single span B is derived by taking the midpoint of the last 52 periods here, and then instead of projecting it under or above the candle, it projects it 26 periods into the future. That's what creates the cloud. Then you've got the Chiku span or lagging line right there. That's the current price projected 26 periods into the past. If that white line is above the candle 26 periods ago, it's bullish. It's a bullish part of the indicator. So we've got all of the elements in the correct order, and we've got them both on the daily chart, and in this case, also on the weekly chart. So there's a weekly chart. Each one of these candles now represents 1 week. Now, let's throw some lines on top of this. We've got some support and resistance levels down. Well, we've got pretty much a support level right there in the monthly chart. Let me just show you the monthly. It's a $66 level. Now, we'd have to really go back in time in order to find out how this thing was created and why did I put that that line there? You got to go back to, are you ready for this, guys? You have to go back to 2007 right here. 2007 is the last time that we were there. It was back on December 31st of 2007. You'll see the high there was $66 when you look at that little box there at the top. So we broke that last month, okay, during the month of January, and now we're still moving to the upside. All-time highs for the Euro Stocks 50. So I'm very bullish on this. Here's the monthly, there's the weekly chart, very bullish, and there's the daily. Now let's contrast that with the S&P 500. You see the difference. look at this sideways action versus the Euro stocks. The Euro stocks are in a nice upward channel, right? They're moving higher. We've got higher lows and higher highs. Okay. That is the definition of an uptrend. What do we have with the S&P 500? We've got consolidation. That's when you basically price keeps stalling at a level of resistance. In this case, it's the 697.84 level, right? And we've been in this for a little while now. All right, so the S&P 500 is not looking as bullish as the Euro stocks. It's as simple as that. And right now it's down 0.53%. You can see that FEZ is only down 0.26. There's the daily chart. Here's a weekly chart, multiple weeks in consolidation, nothing happening, nothing to do except for sit on your hands and wait it out and see if any new news will help to create a new catalyst for the SPY to break that level. You get the QQQ ETF, similar situation, right? Consolidation here in the weekly chart and on the daily chart. And when price gets in the cloud or under the cloud, that's very bearish. You can see that the lagging line there is under, right? It's pretty much, it's actually within the candle right there. That's bearish too. The single span A crossed under the single span B here. That's the future cloud there is bearish as well. We want that single span A, the light colored blue line, to be above the purple line. So that's also bearish. So the Qs are looking even worse than the SPY, honestly. And another thing that you want to pay attention to is, okay, here is the prior high, 637.01. You have to go back in time a little bit, back to October 29th, 2025. That's when we reached that level, back in October. So the market has not moved, folks. I mean, it's been moving, but it has not broken above that level. In fact, since that date, since October, we moved up, we dropped some more. We came and retested that level right there. That was back on, let's see, January 28th. And it dropped again. And now we're just still in limbo, right? So there's nothing happening with the Qs. Dow Jones, I mean, it looks a little better than the SPY and the Qs right now because you can see a series of higher highs and higher lows, right? So we've got higher highs here. You can see that upward channel that's been forming. But it too has been showing a little bit more weakness recently. The Tenkan-sen, for example, the faster moving average just crossed into the slower one. The cloud itself is looking more and more bearish. Notice how the Senko span A is dropping here and the Senko span B is moving up. If there's a negative crossover, that's not a good thing. The Chiku span is just barely above price here. And so again, it's just not looking particularly great. Here's a weekly chart, just holding steady for the last month, basically. Okay, let's look at the Russell 2000. This is a weekly chart. 2 months in a row, we're still stuck in this consolidation area. All right. The market doesn't really know where it wants to be. There's not, there's just a lot of conflicting information out there. There's geopolitical risks. We don't even know if we're going to be going to war in Iran. That's another big thing. That could help, that could, um, make things worse as far as the market goes. There'll be certain winners. There'll be some losers in the stock market if that does occur. And so I think people are just being really cautious right now, and there's not a whole lot of movement here. Obviously, here's a daily chart. Let's look at that too on the daily. Yeah, you can see that the um, the moving averages have been crisscrossing over here a little bit, and the cloud is also very thin, and they're both flat right there. So it's actually kind of creating more. You know what I'm going to throw on here is a symmetrical triangle that I think is going to give us more insight for the Russell 2000. So let's draw that right there. Now, this is a pattern that can help provide insight about, once it breaks through one of these two lines, whether it's the upper trend line or the lower one, we'll get some more insight about where this is going. Like we did back here with the Qs. If I go back to a weekly chart, all right, and we draw this level here. Let me just show you. It was a little bit more, you can see that a little bit more, I think, with the XLK. Let me go to the XLK. That's the technology ETF, yeah. So the XLK shows that a little bit more clearly. And the Qs are primarily a lot of technology stocks, obviously. So remember, this is a weekly level. Okay, weekly chart that we're looking at. See that symmetrical triangle. Now, when price breaks under it, that's typically very bearish. We've been stalling here a little bit. If you look at the directional movement index, the red line is above the green line. That's the negative DI9 is above the positive DI9. That's not a good sign either. Again, no clear direction here except for the fact that we did break this lower support level. And if we go back to the cheat sheet that I have, let's close this for a moment. Let's take a look at this stock patterns cheat sheet here. So we've got two types of scenarios that can occur. You've got the symmetrical triangle, and this is the bullish variant, and this is the symmetrical triangle bearish variant, okay? All right, so there you have it. So there's the actual symmetrical triangle. If price breaks through the top level, that's bullish. If it breaks under the bearish, it's bearish. It's pretty simple. Nothing complicated here. And here's some other patterns as well. If you guys want to get this cheat sheet, consider going to this X page, x.com, and look for my channel. Blue Cloud Trader is the handle. Now you'll also find that link again under the 10 more links here on my channel. Scroll down. There's the x.com / Blue Cloud Trader. All right. So again, bearish, right? So let's take a look at the Dow Jones. Here's the weekly chart, flat pretty much, up a little bit today, 0.08. Here's the daily chart. Yeah, it came down, found some support of the cloud and bounced. And this is not a very bullish candle that we're seeing right now. Nothing special in this market. And then the Russell, we talked about that. We talked about the Russell. Let's take a look at the VIX. The VIX is the volatility index, and that moved up slightly, 3.74%. It's not a big move, but it's still inside the cloud. A little elevated risk. The VIX essentially represents fear in the markets, okay, and volatility. And when that's moving up, generally the indices drop, but it's only up 3.85%. Okay, so let's look at the Mag 7s like Apple. Let's start off with Apple first. Here it is on the weekly chart. You know, this candle, the last candle here is still forming. We won't know what that looks like until Friday afternoon after 3:30 p.m. We'll know exactly where that looks like. But right now it's relatively bullish on the daily chart. Also bullish as far as being above the cloud. We have a future bullish cloud. Chiku span here is above price. Tenkan-sen is above Kijun-sen. That's bullish too. But we're dropping 0.35%. We have a higher low here. We haven't taken out this high. So that's something that you want to keep in mind. All right, so that's the only one of the stocks of the Mag 7s that I would actually even consider, but I don't have a position in it. But you know, if you wanted to have a position, I think this would make the most sense from a technical perspective. Let's look at Amazon, which is down 1.14%. This one is, you know, it dropped significantly from these highs up here. It's, you know, dropped about 16%, right, since January 28th. That's a big drop. Here's a weekly chart that shows you what's happening. It's come down to the lower level here of 197, 195.75, and it's inside the Ichimoku cloud on the weekly, which means there is no direction. And when price is under the cloud on the daily, that's bearish. So yeah, down 1.13%. Here's Google, still inside the cloud, down 1.61%, holding right above the bottom part of the cloud. So that's good. It did pierce it briefly, and but then it's been recovering. If you look at the 3-minute chart, for example, you can see that drop this morning, right? And it was around 10:30 a.m. and basically the stock started to recover. Right now, what it's dealing with, and it's 3:06 p.m. as I'm recording this, is the if you look at the 3-minute chart, is this 200-day moving average. So all the same, you know, aspects of this indicator can apply on any time frame that you are trading it on, and you can use it, you know, to whether you're day trading, whether you're more of a swing trader, or you're using the daily and the weekly charts. You know, but yeah, Google right now is in a state of just kind of no man's land as far as I'm concerned. And if anything, on the daily chart, it looks more bearish than bullish because there are more elements that are negative. So you get the single span A is under single span B. You get the Chiku span here. The white line is under price. The Tenkinson is under the Kijinsen. The only thing left here really is the fact that it's holding above one of the last levels of support, the single span B, the purple line. And it's been hugging it. So hugging for dear life, it's just kind of trying to hopefully recover here. We'll see what happens. The directional movement index looks pretty negative. Yeah, not a whole lot going on. Meta, these last 3 days have been bullish, but and it got above the Ichimoku cloud, but we still have a bearish cloud still. So it's not, we don't have all the elements of the Ichimoku confirming anything here. Here's the weekly chart inside the cloud. I'd skip that one too. Microsoft is up 0.36%. It found a little bit of support here on the 200-day moving average. That's the one thing I will say, as I've mentioned yesterday, is that every time Microsoft hits that 200, like it did back here in 2022 and 2023, it bounced. And again, over here in 2025, right? That was around April 11th, 2025. It bounced. Will it bounce again? Very possible. No guarantees in the market, though. But it is forming a bullish candle as we go into the end of the week on the weekly chart. So here's the daily chart. You can see that yesterday it bounced, it got above that level of resistance, because once we broke through that over here, that happened on Monday, February 23rd. We developed a bullish harami pattern, and then it bounced and it got above, and now it's continuing to move up slightly. But we do have a reversal candle, a spinning top. If you're unfamiliar with these Japanese candlesticks that I'm talking about, there is another cheat sheet on the x.com page. You can find that again if you scroll under highlights on my channel here on the x.com. Click on highlights and scroll down. There's the candle pattern reference sheet, and there's that other patterns reference sheet. So this will give you some more insight on the different types of candle patterns. Let's look at Nvidia. Nvidia's dropping. So remember, yesterday price closed by the end of the day at 4 p.m., but this was the candle that it formed right here. That's kind of a very indecisive type candle. It had a wick at the top. It looks more like a spinning top type candle. And then after hours, it dropped, right? And it got back, this morning, for example, it got back into the box. So where Nvidia has been in this consolidation box for so long, now it's back in it again, right? Notice what happened over here with the directional movement index. The red line crossed above the green line. Higher negative volume. ADX is moving up. That's all not good, basically, for Nvidia. But stalling at a support level, the 26 period, the Kijinsen, and it also has this last layer of support, the Sango span A, that's under that price. Let's look at Tesla. Tesla, also down 2.27% today, under the cloud, bearish. Nothing special happening. We're in a downward channel here still. Okay, and as long as we're in that downward channel, I'd stay out of that one. That's the daily chart, and here's the weekly chart. We're currently under Kijinsen. All right, now we're going to go into the stocks they talked about. There's about, like I said, 26 stocks, so there's a lot to cover. Only 3 of them passed the test, the Ichimoku test. Let's talk about those first. NRG, Energy Inc. Even though it's down 1.23%, this is the weekly chart. You can see that for a second week, we're still holding up above 175.96, and we'll confirm that tomorrow because this candle is still forming. On the daily chart, you can see it pulled back down 1.23% today, but holding up above Tenkinson, Kijinsen. We have a future bullish cloud, so that looks good. VRT looks good on the daily chart. That's Vertiv Holdings. Even though it's down 3.44%, it's holding above the Tenkinson. In fact, it created a nice little long wick there, which means that price dropped under the Tenkinson briefly today, and then it recovered. And we can see that on a 3-minute. So there's the big drop. And since again around 10:24 a.m., it started to recover. It moved up 4.65% since this drop. Okay. XLU utilities also looks pretty good on the daily chart. It's holding above that 46.88 level, even though it's down 0.27. Everything looks good with the Ichimoku indicator. Here's the weekly chart as well. So this is the first week where we're breaking above this high right here. of 46.88 from October 17th, 2025. That's the last time we were there. So I think utilities have at least this ETF XLU um, going into the rest of this week, tomorrow, and into next week. It's a higher probability to the upside. We'll see if I'm correct. The rest of these stocks, there's something off technically about them all, but we're going to run through them very, very quickly. We don't need to spend too much time. APO is under the cloud, so it doesn't qualify for something that I would consider. It's obviously in a downward channel. ARES, Iris Management, same thing, right? There's no evidence here that this thing is turning around. AVGO, Broadcom, down 4.69%. That's also under the cloud on the daily chart, so no on that one. The Carlyle Group, this one here looks a little bit more positive. It's up 5.5% today. It broke through the Tengensen. I would not be shorting. If you're shorting this is not a good time to be shorting because it did find some support at this 48.52 level. Okay, that goes back in time quite a bit, back to 2024. So it's bouncing off that level. We had a bullish harami here. It moved up. I would not be buying to add a position in this, but I would not be shorting it either. CRM, Salesforce, that one also I wouldn't be shorting because it's breaking back above that 193.68 level, which is a monthly level. You can see that low from, what is that from? October 31st of 2023, right there. So it moved up, it retested, it actually dropped under there this month, and then it's recovered quite a bit. Here's the weekly chart, bullish engulfing pattern. Okay, let me show you this pattern right here. A small red candle followed by a bullish larger candle that engulfs it. So that one looks like over here, if you look under double candle patterns, you would find it right here. Bullish engulfing. Small red candle followed by a large bullish one. Right. So let's get back. So that's, again, I wouldn't be shorting, but it's still in bearish territory. It's under the cloud. Wouldn't be buying this either. ETN on the weekly chart, it looks fine. Nothing really terrible about this. That's Eaton Corporation. Price pulled back. We got a nice little bullish candle that's starting to form here. If you get a bullish, this is a bullish spinning top. A bullish spinning top occurs after price has dropped. So if you see that spinning top after prices move down, that's bullish. If you see that same candle, all right, at the top of a move, it's bearish. All right. So ETN, I like it on the weekly, but on the daily chart, it's still under Tengensen, the 9 period. So I wouldn't be jumping into that yet. GLD on the weekly chart, I know that looks good. What's interesting is this long wick that it created this week, right? It dropped under the 9 period for a little bit briefly and then recovered. Here's the daily chart. Today it had a big drop. It reached a low of 442.04 and then it started moving up. I mean, from that low, it moved up 7.98%. Let's look at that on a 3-minute chart. So here we are on the 26th, right? The yesterday's closing price was 473, and then it dropped down to this level. Hold on one second, guys. That low right there, 442.04. Was that I'm not quite sure why that's showing like that. On the 5-minute, we're not seeing that, are we? No. That's kind of strange. Anyway, I'm not, it might be just a little bit of a glitch on the chart here, but basically the bottom line is that on the daily chart, we are currently above the moving averages. Let me show you. Tenkan and Kijinsen, we're above the cloud, and the Chiku spin is above price. So all that's good on the daily. The only negative thing with this particular chart is the fact that the faster moving average is under the slower one. So the green line is under the slower one. If you look at the weekly chart, uh, everything looks pretty bullish, right? So everything's in order for gold. So I'm relatively bullish on golds. Let's look at IBM. IBM is under the cloud, but it's forming a bullish hammer pattern. That long wick represents a lot of buying happening this week, towards the end of the week. Here's a daily chart. that shows those last 3 days. This actually kind of reminds me a little bit of a pattern that's called three white soldiers. Let me show you guys that pattern right here. You see that? It's a triple candle pattern. So that is quite bullish. It also kind of looks a little bit like it could either be that three white soldiers or is it possible that it's falling three? Hmm. I don't think it's falling three because you can see the drop here, and then you can see these three little candles. They're pretty relatively small. Let's look at that chart again. These are like gapping up with each move. It just looks more bullish to me. So you can see the closing price there. It moved up, it gapped up, and then gapped up again. It broke the midpoint of that red candle. That's bullish. Um, and stalling right now at the Tengensen. So up 2.32%. Here's the weekly chart. Let's look at the weekly. I wouldn't be shorting it. Let's put it that way, based on what I'm seeing here. I'd want to wait. Now, there is also the volume. If you look at the volume, it's been declining here. So as price has been moving up, volume has been declining. There aren't as many buyers stepping in. So it's just a lot of mixed signals. So I wouldn't be interested in that one. IGV doing something similar here, right? Another three white soldier type pattern. Um, the volume here is a little bit better. It seems to be equal these last 2 days, but it's under the cloud. It's under the so I wouldn't be shorting it, but I also wouldn't be buying this stock or ETF. Sorry, JOBY is Joby Aviation. It seems to me it may have finally stalled, so we might be experiencing a double bottom here, and that would be on the daily chart, 5.4%. I wouldn't be shorting it. I would not be buying it. I just wouldn't be interested in this at these levels. It's still under the 200-day. Has not taken out. Um, it hasn't even taken out this high yet, right here, as you can see. So it's like a sort of a building a base, but it's more bearish than it is bullish. Okay, let's take a look at the weekly chart on that too, real quick. So it's under the cloud. You can see here a couple of weeks where it's starting to stall. KKR is bearish, but finding support at the 200. It's in the financial services sector. And again, a lot of stocks, whenever they hit that 200, like they tend to bounce. So we'll wait and see. I wouldn't be shorting it here because it is currently above the 200 on the weekly. Here's the daily chart. Even though it looks really bearish here, that's why it's important to look at two different, like use those time frames, the weekly and the daily. You'll have a better assessment of what's really happening and where it might be finding support. So just be really cautious if you're thinking about shorting this. Netflix showing some strength today. It was up 2.9%. Here's a weekly chart. It's stalling. I would stop shorting it if you are, because the momentum to the downside has ceased. I'll show you what I mean by that. If we're using this directional movement index and the red line is dropping and the green line is moving up, okay, that's the positive DI9 and the negative DI9. And the ADX, which represents momentum, starts to have a sharp decline like it is right here. That is actually a bullish situation because it's telling us that the momentum to the downside has stopped, at least temporarily. Therefore, it makes no sense to be holding a short position here because this could potentially bounce, right? And it could potentially break. All trends eventually come to an end. And so you're looking for evidence as to when it's time to take profits, right? So if you're shorting the stock and you're profiting as it's dropping, that's one thing. If you are if you're long a position and you start seeing that same situation happen, like I'll give you an example. If we go back in time with Netflix just for a moment, I'll show you how this directional movement index could have helped to keep you on the right side of the trade. So over here, the ADX was dropping, and then here it started to move up. You can see the white line there moving up. The green line was above the red line, so that was a bullish scenario. If we go straight up, okay, you can see how price moved up from that point, right? Notice here, ADX starts to stall and starts moving sideways. At that point, you should be thinking about exiting your position potentially, because things are no longer looking as bullish as they were. The momentum is starting to decrease, and as you can see here, that would have given you a nice signal, right, to get out before this drop. And how big of a drop was that? It was about a 33.87% drop in Netflix. Okay. So combining two indicators like this one, which I like quite a bit, and the Ichimoku indicator together gives you a more concise picture of what's truly happening on the chart. And remember, this is just all this is telling us is it's giving us it's like a guide, right? It's telling us what's happening between the buyers and the sellers. When price is moving up, obviously the buyers are in control. We can also see the volume. We can see how much trading is happening. But these indicators can give us some more hints about what's going on under the market, right? So if we see that momentum declining, um, it's very simple, very easy to see right here. It can save you from a big drop. Okay, let's keep going. OBDC, Blue Owl Capital, that's still declining, down 1.09%. The momentum is still increasing to the downside and it's stalled at the Tenkan. That's the weekly chart. Owl. Okay, so that's Blue Owl Capital down 2.29. Shake Shack up 8.75%. Here's another stock that is finding support, found support at the 200. Found it here and it bounced. It's finding it here. You can see that bullish harami pattern right there too. So that you get a double confirmation from the candle pattern right there, those two candles. It's called a bullish harami. I'll show you that one. There it is. Large red candle followed by a small little bullish candle. So that happened there right around the 200-day moving average. And then from that point, it moved up 22.34%. Problem is, it's still, okay, it's still under the cloud on the weekly. And if you look at the daily chart, we found some resistance now on the daily chart at the 200. So the 200-day moving average, okay, can also become a problem if price is under it. It can find resistance. So on the daily, on the shorter time frame here, it dropped. Okay, here it got above it, but then closed under it, or it's going to close under. It looks like it's 3:25 p.m. as I'm recording this, so it looks it's more than likely to close under. So I wouldn't be buying it here. Okay, this can be very misleading because a lot of times people can see a stock moving up 8.76% and then say, "Oh, I think I want to jump in. Look at the volume here. The direction movement index is looking great." But you have to look at the whole picture. And if the actual Japanese candlestick is red like this one here, okay, it can be very insightful. What is this telling me? It's telling me that there's a lot of profit taking that took place today. Yes, price jumped, but look what happened immediately after it jumped. Let's switch it to a 3 minute so you can see what transpired today that created this red candle. So here's the 3 minute chart. So we had initially, right, this big gap up. Now this red dotted line that you see here, that automatically populates. It's the closing price when I'm looking at a shorter time frame, like the 3 minute. Anything under a day, that red line and the green line here will pop up. The red line represents the closing price from yesterday. So this is where we closed yesterday. This is where it gapped up this morning. So you wake up and you're like, "Ooh, Shake Shack is up quite a bit." But it was only up for literally about, you can see here, 3 minutes, 6 minutes, 9 minutes, right? And then it kind of started stalling. It did not continue to move up. In fact, you can see we had a lower high here developing, another lower high, right? Another one, there's a slope right there. And from this high here, it actually dropped 7.01%. So it was up even further this morning, right? So it moved up approximately, what is that, 16.9%, and then gave up a good portion of that. And right now, it's currently under the cloud on the 3 minute chart, and it's looking pretty bearish just on the 3 minute. So yeah, I would not be. It's still declining. You can see that right there. Not interested in that one. SLV, silver. Still stuck in this little, you can see this range here. Has not taken out this high. Still into the Kijinsen, 0.51%. I like gold better than I do silver right now. I think gold looks a little bit more bullish to me. We got a bearish cloud here on silver on the daily chart. On the weekly chart, it's starting to recover a little bit. But again, let's look at GLD versus SLV for a moment. Oops, sorry. See what it looks like on the weekly chart. It's much more bullish. Price is above the moving averages. It's above the cloud. So again, you can quickly assess the strength of the trend with this indicator. And again, let's look at silver in contrast, right? A much bigger drop. Yes, it has these last few weeks moved up, but it's not as nice a move up as gold is today. In fact, silver is only up 0.49%. Gold is up 0.81. Snowflake, SNOW, has pulled back on the weekly chart on the 200-day for a fourth week in a row. It's stalling at the 200. Okay. So it's still under the cloud, so nothing to do with that one. SNPS is under the 200-day, stalling over here. Synopsis, I'd stay out of that one for sure. It was down 4.49. TFC is up 1.95% today. On the weekly chart, it's under the Tenkan-sen, but it could recover quickly here. Overall, it's a pretty bullish chart. On the daily chart, it's we have a bearish cloud that's formed, but it's just in the beginning stages. It might be bouncing here. I don't know. I wouldn't be shorting it and I wouldn't be buying it. I'd just be like waiting to see how it reacts. Sometimes you just want to sit on your hands and wait to see what occurs. TTAN is up 11.09% today on the daily chart. You're getting a little bit of a recovery here since it created this little box. It broke through it, but we're still under the 200, the dotted yellow line. We're still under the cloud. We're still under the Kijinsen. So it might stall and reverse course once it reaches 76.72, which is about 4.3% away. You could certainly just break right through that as well, though. But I'm just saying that's the level to look out for as a resistance level. VST, Vistra. Here it is on the daily chart. Second day in a row where it's above the cloud. It's still under the 200 though. And the cloud is starting to turn bullish on the daily. What does the weekly look like? Weekly is still under the Kijinsen and it's inside the cloud. So nothing to do yet. Zoom. Big down day today. Here's the weekly chart where it was above the Tenkan and Kijinsen. We were talking about this level in the past, 92.80. I talked about this. I created that back on April 14th, 2025, guys. Do you see that? When I hover there, it shows me the specific date that I created the level. It was based on this candle. Okay, and that candle, there's the high, 92.80 from November 29th of 2024. So I was looking at prior highs and saw it sometime in 2025, and I said, okay, that's a level that needs to be broken, but not just broken. Price needs to literally close. We need a closing candle. A closing candle is when the body itself of the candle, okay, closes above the 92.80 level. And it also has to happen with high volume. Now, over here, we did have high volume and we did have a break of the 92.80, but that was just piercing it. That's what that wick represents. So, yeah, there was a lot of interest. A lot of buying started happening. People got excited. They probably had a lot of waiting orders right around this level because they were also probably watching that 92.80 level, right? But then the shorts pushed it. They pushed it right back under, defending this scrimmage line, 92.80. The very next week, again, we're looking at a weekly chart. Same thing. It pierced briefly, and then they pushed it right down, right? It's like a balloon back under the water. It tried to recover the next week after that, the week ending February 13th. Another long wick. It reached a high there of 96.91, and then they pushed it right back under. Same situation here, the week ending February 20th. And then, of course, the earnings announcement count comes out, and boom, it dropped. Now, here's a daily chart that signifies all this. And you can see on the daily chart, Even though we were above that 92.80 level, that's a blue line, which represents a weekly level. It needs to break above that weekly level on the weekly chart. We never did get above it as far as closing above it. And so, yeah, you can see the big drop after the earnings, down 12.57%. It got into the 200-day. ADX is moving up. So I don't know how long it's going to take for this thing to recover. There's a little bit of buying happening towards the end of the day. Let's look at the 3-minute chart. It might have stalled here. You can see there's the big gap down there, right? So yesterday's closing price is that dotted red line. Here was the opening price. It immediately started dropping after the open. And right now, since the open, these lows here back around 9:54 a.m., it moved up about 2%. So it's just slightly up, but big drop for Zoom. And then ZS is Zscaler, which is up 6.77%. Let's look at the daily chart. But it's been in a decline for many, many, many days and weeks. Let's look at the weekly chart. Would I be shorting this? No. Again, whenever you get a bullish candle like this, that's a very positive, especially when you've had so many red candles. Look at all those. Each one of these represents 1 week. Over here, it was bullish, and that was kind of interesting. That could have turned into something. It didn't. It doesn't always turn into something, right? Just because there's a bullish pattern, Japanese candlestick pattern, doesn't always necessarily lead to a move up. Once that failed here and it closed under those lows, it moved down further. Now it's trying to recover with a bullish hammer on high volume. Let's look at the daily chart. 3 days in a row, it got above the Tenkens, and finally, could this be the bottom? It's possible. Would I be jumping into this? No, because it's still in a established downtrend. And guys, that was the last one there. So yeah, one of our members also requested the Zoom, so you got to see that there. Folks, that is going to do it for this video. Now, some good news. If you, some good news for me, actually. We reached over 28,200 subscribers, but we're getting closer and closer to, I need your help to get to 29,000. In order to do that, you need to help by just hitting the subscribe button. It's free to subscribe. Hit the notification bell if you want to get notifications of these videos when they pop out. You'll find them up here at the top under that notification bell. And that's free to do. And again, if you click the join button here next to it, this is the paid content. Blue Cloud supporter, you can become a Blue Cloud supporter for $99 a month. And you can request a stock or ETF be analyzed on an upcoming video. Okay. You'll also get access to, early access to some select daily videos that I do a little bit sooner than everyone else. Blue Cloud Trader, you get those, of course. You can request up to 2 stocks or ETFs per month. Just keep that in mind. It's 2 stocks or ETFs per month. This is where you get access to the exclusive member-only strategy videos that I do each weekend. Go over, like I said, entire portfolio. I go a little bit more in depth. And then Blue Cloud Legend level membership. That's the 3rd tier. And here you can request up to 3 stocks or ETFs to be analyzed on an upcoming video per month. Okay. There are some day trading videos that you can find on my channel that are not accessible to the Blue Cloud traders. And then also the more important part is the daily stock and ETF trades update. Now, once you become a Legend level member, I share the trades that I placed that day with Legend level members. There will be a new tab that pops up next to posts. It will say membership. It looks like this. Okay. So once you do that, you click there, you'll be able to find those daily posts. And that's going to do it, folks. Thanks again for watching. I appreciate all of you. I will catch you all in the next video.